Okay, it's 2 p.m. Welcome everybody to another episode of Meet the VC. We started, just for a bit of context, right? We started this webinar series to facilitate learning and development of the startup community in Southeast Asia. The Meet the VC series aims to help you know more about the VCs in our ecosystem, better understand how each of them look at opportunities and investments. Entrepreneurs and startups within the audience can use that information to their advantage. I would just want to share, if you want to get access to our investor network and deeper insight on what's happening in the region, we'd love to have you check out our membership program on our website. The program is designed to help you grow your startup, and we focus on investor and startup matchmaking activities. If you are currently looking for fundraise or fundraising or looking to fundraise in the near future, the membership will help you get connected to the right investor. So please check it out or reach out to us if you have any questions. So today I have with me Mr. K-Mak. I guess I can address you as Mok, right? From
Yes.
Gobi Partners. Again, thank you for doing this with us. Would you like to share a little bit of background about yourself, Mok?
Sure. So, okay, maybe I'm slightly older, so it may take a while, but I'll just make it quick. So my name is actually Khoo K-Mok. Khoo is actually my surname, right? So I'm Singaporean. I'm Chinese educated. As a result, I actually like to read a lot of these martial arts novel. So for those of you who like to read those martial arts novel, I think congratulations. Turn out it's actually going to be very useful when you do business in China. Okay. So for me, after my life in Singapore, I actually took a government scholarship. Went to study computer science. This is in a university that's in Silicon Valley. So I actually went on a scholarship. I had to come back, work for the Singapore government. I came back, work as a consultant. This was in the 90s. We were actually planning the internet in Singapore. So through that work, I actually joined this research lab. It's a government research lab in Singapore. Kind of bonded well with the team. So co-founded a startup. So in the 90s, we actually moved to Silicon Valley, right? So we did the startup, but in the 90s, the market here is small. So we actually went to the US. So I spent another 10 years in Silicon Valley, right? So working in startup, basically went through all the ups and downs. So the dot-com, the dot-bust. And after that, I came back to Singapore mid-2000s. Went to join the government again. So I was involved in a $500 million digital media fund. That's when I started actively investing in startup companies. 2010, so that's about 10 years ago, I actually started the Southeast Asian operations for Gobi.
Okay, so thanks for sharing that. So let's jump straight right into the questions, right? So before we start, I'd like to just inform everyone that this session will be recorded, and we will be sharing this video on Facebook Live, our YouTube channel, as well as a follow-up article that we're going to do with Mok. So let's get straight to it, right? So Mok, can you share a little bit more about Gobi and its investment philosophy?
Sure. So I think Gobi, just a little bit of history. So the firm itself was actually founded by three Hong Kong investment bankers, Tom, Lawrence, and Wyckitt. So they started in 2002, originally focused on China, right? And then 2010, I partnered with them to start Southeast Asia. I think in the initial phase, the focus was actually on a digital media fund. This was anchored by the Singapore government, so we focused quite a bit on these digital media sectors. So to date, across the whole Asia, so we're active across Asia, we have about 250 investments, right? So it's quite a sizable investments after, I think, 18 years of operation. I would say that about 40% of them are actually related to Southeast Asia. So investment philosophy is very simple. So for us, what we feel is we think there's a lot of this entrepreneurial talent around the world. But unfortunately, I think there are markets that are underserved. There are maybe emerging markets, people don't trust them. So our mission is very simple. We actually feel that venture capital is a means to bridge a gap. So we like to go into emerging or underserved markets. It could be by geography, right? So Southeast Asia, maybe 10 years ago. It could be a sector, like a woman entrepreneurship sector, which is underfunded. So we look for these underserved markets. We use venture capital to fund these entrepreneurs. The key is actually to help them solve big problems.
Okay. I'm sure you have multiple funds for at this point in time, right? Could you share with the audience what are the funds that are available, or are there any upcoming funds? Yeah.
Yeah, I think so. I'm just talking about Southeast Asia. So currently active, we have 3 seed funds. So these are focused on specific geography like Singapore, Malaysia, Indonesia, Philippines. With markets like Vietnam, we don't have a specific fund, but we're tied up with Grab Ventures Velocity to go into Vietnam. But our main mothership fund is actually a $200 million Southeast Asian growth fund. So that typically invests in the growth stage companies.
Mm.
Yeah.
And sorry, go for it.
Yeah, sorry. In fact, I think this is timely. Today we just announced for the growth fund, we actually co-invested with Alibaba into a Singapore-based company. It's actually a listed company, but we are bullish on this e-commerce enablement sector. So we're actually doing an asset buyout of a listed company in Singapore.
Okay. Any upcoming funds that that Gobi is raising?
Yeah, so I think we also get into that in terms of the sector, right? But I think 2021, we may actually rotate back to like Series A investment. So at this stage, we have been quite a bit of focus on seed and growth. 2021, we do think that, the investment environment, I think the opportunities is changing. So for 2021, we're thinking of rotating back to Series A investment, but focus on deep tech areas.
Okay, which means the seed companies can still apply. I mean, they still have a chance for the next the remaining months of 2020 lah.
Yeah, no, so seed companies we're investing now. In fact, we had this Super Seed 2 championship.
Yeah.
So seed companies, we're actually investing in them. So, they definitely are welcome to reach out to us.
Okay. So the next question I have is for these different funds, right? For seed and maybe for the Series A that's coming up, right? Are there any specific sector or industries that you're looking at for maybe the different funds?
Yeah, I think seed, generally you want to look for the upcoming sectors, right? So growth fund, typically you're invested in things that has happened in the last decade, right? Because they have grown to a certain size, you need a fair amount of capital to, I think, ward off competition. So what I feel, so in the last decade, if you look at Southeast Asia, it's really mobile internet, right? So it's basically these cheap Chinese smartphones making all these emerging market consumers become addressable market, right? So you think about any of these mobile app services, without a smartphone, it's actually very difficult to work, right? So I think for the last decade is a lot of this mobile internet. If you look forward, if you try to do anything on the mobile internet, let's say on the demand side, you do see a lot of Me Too products because anything that people have thought of, right, it has been executed. So I think definitely for the seed, we are much more keen on what's upcoming for the next decade. And definitely if you ask me what are the trends is, part of it is actually there's a macro trend of this supply chain fragmentation, right? So after this, COVID situation, you do see countries are trying to say, hey, look, it's quite dangerous to have all my supply chain located in one particular country, right? So they may actually want to start to move their supply chain out. So we do think a lot of this innovation will start to happen on the supply side, and a lot of these things could be quite concrete. Like, so on the supply chain, let's say if you are building smart factories, you definitely need 5G, right? So 5G enabled services. So it's no longer just mobile internet, where it's actually, I think, human users accessing the internet. 5G is basically IoT, right? So, robots, any objects can access the internet. I think those are the seed deals we're looking at for the next decade.
Okay. Could you also share for what's the average ticket size for the seed or maybe Series A as well that you typically invest? Yeah.
I think these numbers probably apply more for Southeast Asia. So seed stage, typically the investment size is about 250,000 to 500,000 US. Series A, it depends, but it will be around 1 to 2, maybe more million, right, around. Growth currently is about $3 to $5 million. Obviously, a lot of funds will have reserve for follow-on. So, once you do the first check, if the company is doing well, we'll double down with a bigger check.
Okay, so there's a follow-up investment now, if they're doing okay? Or...
That's correct.
Correct. In terms of investment, right, so how many investment has Gobi made so far? Do you have a number that you guys are looking to invest this year?
Yeah, so maybe more recent performance. So as I mentioned earlier, I think across the Asian Pacific region, because we're operating for quite a number of years, it's definitely over 250 companies. In Southeast Asia alone, I think the last 2 years, I was just calculating, right? We actually ranked the 6th most active investor in Southeast Asia. This is by one of the friendly media platform. Right? I think we did about something like 30 investments in the last 2 years.
Yeah.
We have been on pace. I think every year we're doing about 10. So this year's target is about to do 10 deals in Southeast Asia.
How many have you done already so far in this year? Out of
So
the
we have
10.
Yeah, I would say, including some of the existing round, we have done about 3 or 4. Obviously, the biggest one just came out today.
Okay, so there's
So we're
also
still
room for.
in this environment. It's just obviously people are shifting and things are slower, right? So please be patient during this period.
That's good to know. How is Gobi's portfolio currently doing?
Okay, so obviously, I think a lot of VCs have been actively managing the company. So the first thing when the pandemic hit is, so I think it's centered across the board. The key is actually cutting expenses, right? I think the previous model, pre-pandemic definitely is a growth mode. This period is really survival mode, right? And the key metrics really is back to runway, right? So on our side, definitely we are looking at, so in general, the later stage companies, they definitely have longer runway. The earlier stage companies, typically they have shorter runways. I think about half of the companies they have, in our portfolio have runways of more than 1 year, about 80% have more than 6 months. And this pandemic has also been interesting disruptor, right? Because, besides, guys who are trying to cut costs and survive, there are actually sectors that are actually winning as a result, right? So I think very, very clear cut, things to do with work from home and all the home-based stuff, right? E-commerce, logistics, even gaming, all these are doing very well. So this pandemic is interesting, right? It actually disrupted the existing landscape. Some guys are becoming winners, while the rest, you more or less need to survive because the market is actually doing a very important function. It's actually clearing up your competition for you, right? So last time you may have to grow to kill the competition, right?
Yep.
Today, you survive. Make sure you are the survivor because the market is going to do the job of cleaning up the competition for you.
Is there anything particular that Gobi is doing to help some of these companies tied through your portfolio tied through the pandemic?
Yeah. So I think for us as an internal investor, we have been giving advice as one, but more importantly is actually helping fund internal round. We have also been going out. I think one of the key thing, because we actually sort of in a sense we came from outside the region, right? So we expanded from North Asia here. We do have quite a bit of linkages in North Asia. So we have been doing like Zoom session, pitching session. We're planning some with Japanese companies. In China, last time we do this regularly on a regular basis. So if corporates that's operating in China, we'll bring our Southeast Asian companies for demo day there as well. Obviously, now we have switched to Zoom.
Okay. Are there any chance of an exit for this year? A possible exit from your portfolios?
If there's any exit, I think it's probably kind of like a merger type. I think we are still early in the cycle. I think this pandemic, either you're exiting because you sort of need to combine with others. But we do think this pandemic is really like a stepping stone, right? A lot of guys we have seen companies that have maybe 30-40 months of runway.
Yeah.
They're actually now trying to hire technical talent. They're actually using this time to consolidate and build up. So we think this period may not be a good period to exit, right? Especially if you are trying to ask for good valuation, it might be tough.
Okay. All right. So coming back to Gobi's investment, right? I guess what could you share with us, right, on the audience? What are the qualities that Gobi looks for in a potential founder or investment? Yeah.
I think this part maybe is helpful to share a little bit about business model of VC, right?
Yeah.
So VC typically, this industry actually is a very difficult industry because I'll say our industry, failure is actually the norm, right? It's just very normal, right? And I'll say that success is always the exception, right? That's how we operate, right? So I think to compensate for this, the success has to be exceptional, right? Which means a lot of times the success is going to be big so that you can cover for the losses. So I think this is actually something very important, I think, for startups to be aware of, right? Because of this nature, as a result, you want to get the big winners. The first criteria is you got to be looking at a big market, right? So sometimes I do get entrepreneurs approach me and say, wow, okay, I'm a profitable company. Why don't you invest in me? Right? These guys is losing money. But I think they actually forgot. The guy who's losing money actually is chasing after this big market, right? So in the process of acquiring market share, he's definitely losing money. But of course, if he can prove that there's positive unit economics, or let's say if he's a perceived winner, right? At the end, if you're a perceived winner, you're in a position to raise prices, right? So I think these are some of the things that entrepreneurs may not understand, right? They say, oh, okay, I'm definitely better than them, right? But I think market is definitely something important. So you have to go after a big market. Then the second thing is actually the founders. I think founders, the key thing we look for is actually coachability, right? Because if you think about startup, it's actually a very special kind of SME, right? Because a startup today is a small company, right? 5 years later, it's going to be a conglomerate, right? Because they're growing very fast, right? So a lot of people never realize, right? For maybe I use a analogy in the military, right? When I first invest in a seed startup, the guy is like a platoon commander, right? He's running around controlling 10, 20 men. 5 years later, this guy is going to be a division general. He's running a 3,000 employee kind of organization, right? Coachability is very important because, anybody who, growing from a platoon commander to a division general within 5 years, he needs to be coached very well, right? So what happens in the early days, let's say during the dot-com days in Silicon Valley, what the VCs used to do is, okay, founder of the company, when you grow the company to, let's say, 10 million, they will actually promote the founder as a chairman. They'll bring in a professional CEO, grow a company from 10 million to 100 million.
Yeah.
When hit that stage, you bring another CEO to run the company and bring IPO. But I think they realize that this is quite disruptive to, I'll say, the morale of the company. So if you look at what has happened to Google and Facebook, they basically brought in senior guys like Eric Schmidt for Google, Sheryl Sandberg, right, for Facebook to coach the founder, right? I think this is the key, right? So if the founder cannot scale, because we're talking a highly scalable startup, it's going to be a challenge, which is why I think among founders, a lot of people may not explain it, but coachability is probably the most critical aspect that we look for.
Okay. So in terms of, like the team, the product, the founder, and the marketer, how would you rank in terms of priority?
Okay, this one maybe I have a different take. So in Chinese, they say this thing 天时地利人和, right? Means you need timing. Is ground advantage. 人和 means actually harmony between people. So it's almost translate to timing, market, and team. Okay. I know you actually have product in there, but I believe some guys in Silicon Valley, and Idea Labs, Bill Gross, they have actually did a study on product, right? Because VC, we operate in a disruptive industry. You can create products, but what determines the success of product is actually timing, right? So I'll give an example. Like Gojek, they started in 2011, but they were actually, not a lot of people realize they were actually hibernating for a couple of years because before 2014, there just wasn't enough smartphones. So think about Gojek running on feature phones, and it was not working because you have to send SMS, you have no way to tell where the user is. So I'll say, in terms of this question, you need all three to work together, your product, your team, your market. But ultimately, what decides the winner is actually the timing.
Okay, very well. That was something insightful. So coming down this pandemic, right? Do you have any advice for the startup community on how to, either tie through the pandemic or even behave or operate in the new normal?
Yeah, I think so. First thing is definitely is a tough period. So I think that is for sure. I think fundraising is going to be very, very challenging. So I think the first thing is you have to figure out how to survive. You already have existing investor. Definitely, you need to kind of lean on your investors. If not, you may have to look at all sort of options. We have looked at guys who are maybe even thinking of hibernating. I think those are all possible option. But I think ultimate thing is you got to survive, right? As I mentioned, survivor is critical because the market will wipe out the competition for you. So whoever survive, if you live another day, you actually can fight a war again.
All right. So I think that's all the questions. We will go to the Q&A, right, from some of the audience. We have the first question from Daryl. So I think the question for you is, at this point in time, right, which markets or opportunities in Southeast Asia is the most exciting for you? And maybe you can share also for Gobi lah.
Yeah, I think I already mentioned this before. Anything that's home based. I think even before the call started, we were talking about this YouTube.
Yeah.
It is true. I think unfortunately, what has happened is with this pandemic, it sort of erased this offline advantage. So think about it. If you're dependent on offline business, actually that's going to be very tricky, right? But if your thing is purely online and if you do it well, you have advantage. But online, the challenge is you got to be the top guys, right? Because it becomes more like a winner take most, right? So the top 10 influencers, they may actually take away most of the revenue of that sector, right? Before, with offline, is probably more fragmented. So you do have that offline advantage. During this period, I think that the offline advantage sort of goes away. So a lot of guys who have offline business, definitely you need to look at omni-channel. So I think that's what is happening during this period. But as I said, as a seed investor, I'm definitely looking out for what's coming up next, right? Post-pandemic, what is the macro trend that's happening, right? And I mentioned that we do feel that a lot of opportunities will be on the supply side, right? So if you are old enough to remember the 80s, maybe you are going back to like the 80s, right? In the 80s, actually a lot of innovation, you may not see them, but it's actually happening on the supply side. So for example, semiconductor. In the 90s, Singapore used to have a hot startup. It's called Creative Technologies. They were focused on sound card, sound blaster card. They became big, listed on Nasdaq. So I think we may be going back to that kind of phase where it's not immediately applicable to the B2C side, but a lot of innovation happening on that B2B or on the supply side.
Okay. I guess we have a next question. Does Gobi invest in the Indian subcontinent, like Sri Lanka, India, or Bangladesh?
Well, that's a good question. So currently we do have a fund in South Asia, but it's focused on Pakistan. So in India itself, we have not made any direct investment. Part of it is actually we do think that there are probably a lot of it's not exactly underserved market. There's probably a lot of maybe US VCs or local VCs that are operating in the market. But I think if there is a Indian entrepreneur that's actually bringing a service to this part of the world, let's say Southeast Asia, we definitely can look at it from the angle.
Okay. The next question is, what is your opinion on the mobility sector?
Okay, so I think, so in general, if you look at the mobility sector, I would classify them as robotics, right? People don't think of it that way, but if you think of autonomous driving, it's basically a transportation robot, right? You just move very quickly, you know how to avoid people and all that, right? So I think it's that general category of robotics. I think right now, I guess part of it is actually because of operating environment, we do see more of these happening in controlled spaces, let's say industrial parks, where you do see mobility services. But over time, definitely, we do see this coming into a consumer space. The question is how long, but I think a lot of opportunities currently is actually on a B2B, maybe industrial side.
Okay. Another similar question. What are your thoughts on the Proptech sector?
Proptech is interesting. I think maybe I did an article with E27 recently as well. So I think property in Asia is unique because one, we have a densely populated countries. Number two is, I think in Asia, there's still a lot of urbanization going on. So I think in terms of property in cities, I think the demand is a long-term uptrend, secular uptrend. The key is, I think, how do you use technology to optimize it, right? So definitely we're invested in this space where companies are using technology to operate more efficiently. So whether it's like a co-working space, or whether it's actually kind of rental, either short-term or longer-term rental, by using technology as a differentiator. So we think this is an interesting space because, especially in Asia, right, there's still, I think, high demand for such real estate. It's just how do you actually optimize it using technology. And I do think what is interesting too is if you look at the macro situation, there's just a lot of liquidity, right?
Mm.
In all these, developed countries, right? At some point, they're going to realize, hey, look, I need to look for investment elsewhere. I think through Proptech, if there's a good way to package some of these investment, especially there's a good technology to operate and generate the cash flow for these properties, and with the right platform, I think potentially we can see offering these to overseas investors. I think there's an interesting development there.
Interesting.
Hmm.
The next question would be, okay. Hi, Mark. Wanted to learn more about your new fund, Tapwata. Is this something that Gobi is working on?
Yeah, so I'll say Tapwatech, as I mentioned before, one of our philosophy is really the underserved market. So Tapwatech really is we're looking for innovation for the Muslim market. So in actual practice, so for example, we do have a Pakistan fund that's already operating. That one definitely is Tapwatech because of the market that we focus on. But longer term, we're definitely looking at markets like Middle East, even Africa. So if you think about it, it's actually a sort of a bit of abstract sector, but ultimately there'll be certain funds, whether they're geographic funds that focus on it to cater to this market.
Okay. The next question we have is, I think we had a chat that you shared with me yesterday about Indonesia, right? And the question is, how do you see Indonesia as a market to invest? And also the timing, right? Compared to the other markets in Southeast Asia and also other markets around the world, such as the US, maybe Europe.
Yeah, that's an interesting question. So I think Indonesia has certain advantages. So I think I went back to say that, hey, look, big market is important. So you look at Southeast Asia alone, just look at the GDP numbers, right? To get the size of an Indonesia, you need to choose any 3 countries in Southeast Asia. Okay, that is just the reality of it, which means if I invest outside Indonesia, I actually need to invest in a startup that can scale at least 3 countries to equal to 1 Indonesia, right? So Indonesia does have the advantage that the market is big enough, it's 40% of Southeast Asia, right? But of course, once you have that model, it's also competitive, right? So the locals are all there, right? So there is always pros and cons. If you look at the developed markets, the challenge there is, these markets they're highly developed, right? The ecosystem, the financing, everything is actually very well developed. To get into those markets, I think the advantage guys like us have to bring to the table is how do you bring the technology out of the US, for example, right? Because there's no way you can actually help them in the US market, right? They have more money than you, they have more connections, right? But they may want some diversity in terms of investors because, hey, look, if they want to be a global product, they may want some international investors to participate in their investment.
Okay. The next question is similar to the sectors. What do you think about the future of hospitality and the travel industry?
Well, this is okay. I'll tell you my experience. Okay, so a lot of people realize. So after September 11, okay, after September 11, if you are old enough to remember what happened, is there was a company called WebEx.
Yeah.
Okay, okay. So if you look at the guy, the founder of Zoom, he was actually from WebEx. WebEx is a Silicon Valley company. I actually visited the company. It was founded by an Indian engineer and a Chinese engineer. Right after September 11, they became like Zoom. Everybody was using WebEx, and they say, hey, look, we don't have to travel anymore for face-to-face meeting. Let's just do it over WebEx. Okay, that was I think 2001, right? 2002, 1 year later, everybody was traveling again, right? So I think this human nature of socializing, that is actually hard to change. What is different with this pandemic is, unfortunately, this one has a healthcare situation involved, right? For September 11, it was actually I would say a psychological fear of flying, but then people just forget about it very quickly. So in terms of the recovery for I think travel and hospitality, it's actually very, very dependent on when we get a vaccine, right? Because without a vaccine, there's always this awareness of consumers that, hey, look, it's actually unsafe to go out, right? So the consumers will actually kind of restrict, and therefore the demand will be depressed. So what is unclear now is, when this, travel and hospitality will recover. But on the other hand, I do think that because of these kind of emergencies, government has become very proactive, right? So they have to come out with policies, right? So either they'll try to stimulate local demand for some of this hospitality. So if the country is big enough, they have to put in, I'll say, incentive for locals to start maybe go and visit the zoo, go for staycation, right? The other possibility that we're seeing is really government will start to go into a lot of fiscal policy to invest in infrastructure, right? That's why I think the supply side, all these 5G, government is actually going to do something there, right? So there's two ways of this, right? So travel, government will try to bring back maybe the domestic tourists, but at the same time, they have to invest in new sectors, infrastructure. I think there are opportunities there as well.
Okay. And as a follow-up question for the same person, what do you think about the e-payment sector? Is it overcrowded at the moment?
Yeah, so payment is generally a very low margin business. So you need to be like an infrastructural player, right? So if you don't already control this kind of like very massive marketplace, let's say in China, think about it, people will use messaging, right? WeChat, because they use messaging almost every hour. It's such a recurrent app that they can slap payment on top. That's what WhatsApp is trying to do as well, right? And in Southeast Asia, obviously, transportation is the next best recurring app, right? So you have to use it almost every day if you take Gojek or Grab, right?
Yeah.
So unless you already control that kind of highly recurrent marketplace, think about your margin is so low, right? This space is going to be very difficult. I think it's a consolidated space unless you have a new angle. So otherwise, I feel that, hey, look, it's a Me Too product. People are already doing that out there. Yeah.
Okay. The next question, the two people are asking a question, but it's very similar. So I'll just ask one, right? Can you share a little bit more about the upcoming interest for the 2021 on deep tech? Like, how do you guys define deep tech? And which sectors will you guys be looking at?
Yeah, that's a good question as well. So deep tech, unfortunately, a lot of people also think deep tech is also long tech, right? Takes a long time. So generally, I think the definition of deep tech will be, if you have read 0 to 1, it's more fundamental kind of improvement. It's definitely not right now what we see here is a lot of tech applications. So it's one to many, right? So there's no huge R&D. Generally, deep tech, if you look at what is happening in the US, deep tech, you do need an underlying layer, which is maybe universities or very strong corporate that has R&D capabilities.
Yeah.
So I think generally deep tech will come from this kind of institute of higher learning or corporate R&D, right? So that definitely is very important, right? So which means in Southeast Asia, maybe the markets where there's strong universities, I think maybe Singapore, Malaysia, Thailand, hopefully Indonesia. I think we have to start to look at tying out with these universities. I think that's where deep tech is from. Obviously, the challenge with deep tech is, hey, look, there's already a lot of global competitors, right? So maybe for Southeast Asia, in the context of Southeast Asia, maybe it makes more sense for us to partner, right? Because we obviously have very strong neighbors, whether they're Japanese, Korean, or Chinese. Probably already have a lot of fundamental innovation. Maybe the goal is actually to partner with them rather than try to reinvent everything ourselves. But of course, I think there are one area that may work very well for Southeast Asia is actually food and agri-tech, right? So if you look at Southeast Asia, we still have countries that is very strong in agriculture, right? I think that is easier, right? Because you're trying to apply technology to agriculture. I think this space may be a low-hanging fruit for us.
Okay. Wow, a lot of people asking you what your opinions about sectors. So the next question is, what do you think about the future of the gaming industry? Well, yeah, I also kind of like gaming, and it's getting matured in terms of the market expansion, right? So what do you think about the future of this industry?
Okay, gaming is interesting because I was in the gaming industry. We invested heavily in gaming. I used to be from MediaCorp. I was in the media industry. This industry will never go away, but this industry, the success is hit driven, right? Look at movies, look at TV shows, even game is the same, right? When we first started the fund from 2010 to 2013, we pretty much invested in all the game publishers, game developers, right? For a lot of these game development right now, they do not generally exist in Southeast Asia. because you have big markets like China, Korea, Japan. They are able to nurture this kind of talent. So, so unfortunately, that part of the value chain is not exactly being found here. What is unique in Southeast Asia is really game publishing, right? Because of the fragmented geographies, you need to localize the game for different countries. There has been a lot of kind of investment in those space. Obviously, our biggest success from this market is Garena. It used to be focused on game publishing, right? Obviously, they evolved into bigger deals. But gaming is a sector that won't go away. You'll continue to grow. I think it's already bigger than, let's say, the movie sector, right? It's just that success in here, if you're doing content development, is all hit driven.
Well, when you say hit driven, as in how many people actually use the game or download it, or
sorry, hit driven as in actually there's no good way to predict whether the product you create will win. It's just a movie title, right? You can invest $200 million, you only make $10 million. You can make a sleeper hit where you spend $10 million, but you make $200 million. It's very hard to predict.
Okay. Yeah, I see a lot of questions. So ride-hailing. So ride-hailing have already transformed to delivery companies within Southeast Asia. Is there more space for new players to offer both ride and logistics services in Southeast Asia?
I think once again, as I mentioned, it's a Me Too kind of situation. But anyway, what's interesting in that question is ride-hailing, in a sense, is actually impacted by a pandemic, right? The pandemic sort of is kind of reversing this sharing economy to become anti-sharing economy, right? Because now you're actually concerned when you take a Grab and then there's a driver that is a stranger, right? There's a risk. So what we have seen is actually, in this market, used vehicle sales have gone up. Maybe not in Singapore because we control the car population, but in other markets, people are actually, buying used car because they want to, drive to work, feel more safe, right? So I think almost, if you look at this ride-hailing, the reason why they're shifting to food delivery is because, there's probably a negative impact on ride-hailing, right?
Yeah.
And shifting to logistics. But then logistics, in a sense, it's once again is a heavy industry, right? Lower margins. So I do think if you go into this space, you're gonna once again be very clear what's your value proposition. Otherwise, it's just another Me Too. It's going to be very difficult to get funded.
Okay. All right, we have time for maybe another one or two more questions before we wrap things up. Wow, you're very popular. A lot of questions coming in. All right, now there's one question. What are the valuation range Gobi looks at for Series A investment? And are you expecting to discount the valuation at this period of time?
Okay, I think so. So this kind of market is there's a psychology involved in valuation, right? Because part of it is actually it has to be a willing buyer, willing seller, right? And it also goes down to motivation, right? So think about it. If let's say I invest a certain amount of money, and then you don't own a big chunk of the company, there's going to be a problem. You're not going to be motivated, right? So generally, the rule of thumb is when we come in, we want to take significant minority, but we don't want to take majority stake, right? What is significant minority, has changed over time, right? I still remember maybe 10 years ago in China, in the company that just came out, we can do let's say $2 million own 40% kind of scenario, right? Those scenarios are all gone, right? Because there's more liquidity in the market. So maybe 10 years ago in Southeast Asia, you probably can get those kind of companies, right? But it will be very risky, right? I think today, because of the amount of funding available, you won't get this kind of high ownership. Sometimes I think maybe I'll say even less than 10%, depending on what which are the investors in there. That might be the norm.
Okay, and then I think this is the last question, right?
Okay, thank you.
So, who are some of the investors that you look up to, and what are some of the most valuable lessons you've learned from them?
Maybe I wouldn't name names, but maybe I'll just point to a movie, Godfather, right? I think the best VCs are the one that behaves like Godfather. Okay, the best VCs actually they don't talk a lot. You go to a meeting, they just sit and listen. Then they ask a few questions, and then they decide. So if you want to see who does that, just go and watch a movie, Godfather.
Okay, actually I haven't watched Godfather yet. I should put that on my to watch list.
Okay, go and watch it.
Well, okay. I think we have still a handful of questions here that I think we will try to address it over the article that we'll be writing with Mock as a follow-up, right? So let me just change the slide here a little bit. Thank you. So again, thank you so much, Gobi, Gobi. Thank you so much, Mock, for doing this with us. I think it was a highly engaging session. Many questions. You're a very popular person.
Thank you.
Right. I'm going to show the slide for the next one. Okay. All right. So I'm just going to stop here. So thank you again for doing this. We really appreciate it. Right. So for the audience, right, we have over 250 investors like Gobi partners who is looking to connect with early stage tech startups for investments ranging from pre-seed to Series B. Please check out our membership program and feel free to connect with us and the team to know more, right? So for the webinar next week, fortunately it's not the Meet the VC. For next week, we will have a corporate venture building across Southeast Asia. Why and why not with Joaquin, founding partner, Tamana from Innovation Labs, and also Ziv from Venture Partner. We'll be doing a chat with them next week, so please feel free to tune in if this resonates with you. Yeah, and next we'll send out a survey shortly after the webinar, so please take your time to let us know what the other topics that you wish to hear about, and we can try and improve it on the webinar. Meanwhile, please feel free to connect with us on Facebook and Telegram, Twitter, and Instagram as well. Mock, sorry, I think I forgot to ask you this. If the audience wants to connect with you, right, what's the best way to connect with either you or Gobi partners?
Okay. Can I send you my email after this?
Oh, really? Yeah, I'll send you an email. Okay.
Okay.
Yeah. Thanks.
Podcast. Okay.
Podcast. Okay. Yeah, and that's about it. So thank you again, Gobi partners, for participating in this session. Thank you, everybody, for tuning in and for taking your time. We hope to see you soon. Thanks again, Mock. Thank you so much, and take care, everybody. Yep.
All right. Bye.
All right. Bye.